Hello guys, welcome back to another trading video. In this one we're going to be analysing HLBZ. Now I did find quite interesting, and why we're analysing this today is obviously it did close down over 17% on the day, but what was quite weird is at 329 for some reason all of a sudden we had a massive spike down. Obviously on the day we weren't down massively, we're kind of just consolidating this range and all of a sudden broke to the downside. Can't see any news related kind of fundamental issue on why this happened all of a sudden. So maybe this comes out a bit later, maybe it was something happening from the insider perspective, really don't know, but it was quite a big move that happened all of a sudden. But what are we looking at then going forward, looking at the proper technical levels on our standard deviation charts on both a 6-month and 1-year chart. So as of right now, obviously been a very strong sell-off going into the past year, going from around $7 down to 10 cents. Obviously as soon as you see that, big concern, probably not something you want to be investing in. But if you're looking for trading levels, what are we looking at? So to the support side, we don't actually have any on the longer term. We can see our closest support is at a negative 5 cents. Obviously, we cannot trade into the negative, so no help there. But if we want resistances, we do have at 49 cents, 77 cents, $1. And then going higher, we do have final levels kind of pushing up to kind of $1.50. But again, these are so far from where we are now, currently sitting around 11-12 cents. I wouldn't be paying too much attention to this because, I mean, just to even hit this first level, we need to push up by about 400%. So these are definitely longer term levels I would be paying attention to, but what we're really going to have to do is cut down to a shorter term 30 and 90 day time frame to see closer to where we are now and trading opportunities closer to where we are now. So if we start pushing to the downside, we then can get some supports at around 9/10 cents. We have another one at 6 cents and a final one at 3 cents. So these would be the support levels to the downside, basically just in 3-cent intervals. Again, a bit of risk buying these because it is just catching a falling knife. There is probably no fundamental change to kind of think direction is going to change. So instead, and kind of what I'd be paying more attention to is waiting for us to break over our statistical mean at this kind of 16-17 cent. And what I would really want to see is us push up to 20 cents. So when we start pushing up to around 20 cents, this is something I'd be looking to catch more short bias. So at $20, 23, 25, 27 cents, and a final level at 30 cents. These are kind of levels where I would be looking to join this trade short. Reason for that is, again, it's just given us reason. The overall past year performance is very bearish. I don't believe there's much fundamental change in the business to kind of expect any sort of reversal. So why would we kind of play against that trend? And that's why I'd be looking more at these upper levels. As soon as we hit these, just try and join that trend short, get some good risk to reward, especially if it pushes up to these higher levels, like it did going back, you know, about a month or so when we got that good previous momentum push, which was obviously a great opportunity to you're unsure, and that's really what I'd just be looking to do again. Anyway, hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out this analysis video.